Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us start a new chapter, that is preparation of company's final account. In this video, we are going to discuss what is a company's final account, the format of balance sheet, the format of profit and loss account, and what are the necessary working notes which we have to prepare while preparing the company's final account. Now first, let us try to understand what is final accounts. Final accounts are the accounts which are prepared at the end of the year. Now, at the end of the year, every year, at the end of the year, every company has to prepare the final accounts. It includes the balance sheet as well as the profit and loss account. Now, why company prepares this balance sheet and profit and loss account? Basically, to know the financial position of the business. So the basic objective of preparing such accounts are to know the profit and loss earned by the company. The basic objective of preparing the final accounts like balance sheet and profit and loss account, it is to know that what is the profit or loss earned by the company during the year. Second is to know the financial position of the business. So, to know the financial position of the business, it is necessary to prepare the statement of profit and loss and the balance sheet at the end of the every year. Now, this balance sheet and profit and loss account is prepared as per the Companies Act 2013. So, as per section 129, every company has to prepare the statement of profit and loss account and balance sheet at the end of the year. So, it is a statutory requirement, means it is a compulsory requirement for a company to keep the proper books of accounts for recording financial transaction and preparing its statement of profit and loss and balance sheet in a prescribed format. Okay, so now what is this prescribed format? Every company have to prepare the profit and loss account and the balance sheet. Now previously the balance sheet as well as the profit and loss account were prepared in a horizontal format. Okay, where to the left hand side were assets and left hand side were the liabilities and right hand side were the assets. So that was the horizontal format which companies were using to prepare the balance sheet and the profit and loss account. But in the Companies Act 2013, section 129 schedule 3, it gives a prescribed format where company has to prepare the profit and loss account and balance sheet in a vertical format. So we will discuss the format of balance sheet as well as the profit and loss account. Now this is the format of balance sheet that every company has to prepare at the end of the year. So format of balance sheet, name of the company name is to be written here. Then balance sheet as at 31st March, whatever the year is. So first see vertical format, see first will be the liabilities and second will be the assets. Now here the particulars working note. So here all the working notes, whatever the adjustment, the calculations will be there, you will do it in the working note, and here the final amount you are going to note down. So whatever adjustments are there, depreciation, share capital, etc., that is to be that notes is to be done in the working note, and the final total will be written in the balance sheet. Okay, so current year and previous year. So current year values will be written here. So first in the vertical format of balance sheet is equity and liabilities. In equities and liabilities, first is shareholder funds. In shareholder funds, there are share capital, then reserves and surplus, money received against share warrant. Now, whatever is the total of share capital, you will note down here the total of the share capital. Then, whatever is the total of the reserves and surplus will be written here. All the working notes you will do at the end of the balance sheet. Now I will show you the working note. Okay, for example, first working note will be of share capital. Okay, as in the format, if you see in the shareholders fund, first is share capital. Okay, so share capital working note, in the share capital working note will be authorized capital, issued and subscribed capital. Then from issued and subscribed capital, you have to less the calls which are unpaid, calls in arrears or unpaid allotment money, and if there are any shares forfeited, that you have to add. And then here the final total will be there. Now this total you have to write in the balance sheet in front of share capital, and note number will be 1. Okay, now here see, working note will, the numbers can be changed. Okay, it is not necessary that share capital note number 1. So share capital working note can be 2 also, 3 also, it depends. Okay, as per the examples, the working note numbers can be changed, but in this video I have written all the working note in the sequence. But it doesn't mean that this working note will be same in the problems also. It can change. Now in the reserves and surplus, the working note in reserves and surplus, there will be capital reserves, share premium, other reserves, then profit and loss will be there, the opening balance of profit and loss, add the current profit, if there are any dividend that is to be less, then transfers to reserve, it should be less, and the total amount you are going to write in the balance sheet. Okay, so hope you have understood that in the balance sheet you will not do any adjustment, any working, you will just write the final amount. In the working note you are going to do the working, okay, adjustment, and the final total you have to write in the balance sheet. Next is the share application money pending allotment. Then next, in the equity and liabilities, the third point is non-current liabilities. So in non-current liabilities, there are long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. So all these working notes you are going to do, and the final amount you are going to write here. Now working note, in each working note means in each heading, like long term borrowings, what will be the particulars or items I have note down. So I will show you once we discuss this balance sheet. Next is the current liabilities. In current liabilities are short term borrowings, trade payables, other current liabilities, short-term provision. Now all the totals of each heading will be written here, and then from add all and write the total of the liabilities in the total column. After writing down the liabilities, next will be the assets. In vertical format, first will be the liabilities and second will be the assets. Now in assets are classified into non-current assets and current asset. In non-current assets, there are property, plant and equipment. It means the fixed assets. Okay, tangible assets, intangible assets. Then whatever is the total of this property, plant and equipment will be written in the amount column. Next, capital work in progress, investment property, goodwill, other intangible assets under construction, then biological assets other than bearable plants. In financial assets, there are investment, trade receivables, loans, other. So these all headings, under these headings there are some items. Note down all the items, and the final amount you will write in the amount column. Then deferred tax assets, other non-current assets. These are the non-current asset items. Then in current asset, there is current investment, inventories, trade receivable, cash and cash equipment, short-term loans and advances, and other current assets. So all the current assets total you will write down, and then less the liabilities and the then match the liabilities and the assets total. So this is the format of balance sheet. Now we will see the working notes heading. Under the heading, what are the items which you have to record under the heading of share capital, under the heading of reserves and surplus. Okay, and then we will move to the format of profit and loss account. First we'll see all the working notes or the headings of under which heading the items will come. Now first is share capital. In share capital you have to record all the authorized capital, issued and subscribed capital. From this, less calls unpaid, calls in arrears, unpaid allotment money, and add if shares are prohibited, then total all the amount and the final amount you will record in the balance sheet. Clear? Now next in equity and liabilities is reserves and surplus. In reserves and surplus, the items will be capital reserves, share premium, other reserves, any type of reserves or surplus you have to note down. Then the next point in reserves and surplus is profit and loss. In the profit and loss, first you will write the opening balance of profit and loss. Then add the current year profit, less if there is any dividend and less any transfer to reserve. Do the total and final value you have to note down in the balance sheet. Next is non-current liabilities. In non-current liabilities, first point is long-term borrowings. In long-term borrowings, the long-term borrowings are bonds, debentures which are secured, then interest accrued and due on debentures, public deposit. If public deposit are in the credit side, it will come under long-term borrowings. Then fixed deposit, mortgage, long-term loans, any type of long-term loans will be long-term borrowing, it will be recorded in the long-term borrowing. Term loan, unsecured loans for working capital, long-term loan from central government, long-term maturity of finance lease obligation, deferred payment liabilities. All these items will be recorded in long-term borrowings. Then do the total and write the final value in the balance sheet. Next in non-current liability is other long-term liabilities. In other long-term liabilities, the entries will be premium on redemption of debentures. In the other point in non-current liability is long-term provisions. In long-term provisions, the entries will be provisions for employee benefit, warranties, gratuity, workman compensation, staff benefit fund, employee earned leave payable on retirement. All this come under long term provisions. So in the example you have to write down that this item belongs to long term provisions, or for example deferred payment liabilities. This deferred payment liabilities will go in the long term borrowing working note. So you will record the entries in that working note. Next is short-term borrowing. In short-term borrowing, cash credit, overdraft from bank, demand deposit from bank, loans from debtors, advance from creditors, loans from bank, bank overdraft. This will come under short-term borrowings. Next is trade payables. In trade payables, the entries will be trade creditors, sundry creditors, bills payable, payment due to supplies of goods. This all will come under trade payable. Next is other current liabilities. In other current liabilities, the entries will be outstanding interest on debentures, outstanding interest on loan, if there are any unpaid dividend or unclaimed dividend, it will come under other current liabilities. Then calls in advance, revenue received in advance, prepaid income which is received, outstanding expenses, expenses payable, interest accrued and not due on loan will come under other current liabilities. After other current liabilities, next is short-term provisions. In short-term provisions, proposed equity dividend, provision for employee benefit, staff provident fund, provision for taxation, pension funds will come under short-term provisions. Now after this, you will after these were all the working notes of the liabilities. Next we'll move to the assets. In assets, property, plant and equipment. This is like fixed assets. In property, plant and equipment, the entries will be land and building, business premises, plant and equipments, office tool, freehold property, furnitures, fixtures, then motor cars, machineries, etc. All the fixed assets will come in the property, plant and equipment, and if there are any depreciation, you have to note down. Next, in capital work in progress, buildings which are under construction will come under capital work in progress. Next, investment property. In investment property, whatever is the investment property will come under the investment property. In goodwill, goodwill. Then in other intangible assets are brands, trademarks, computer software, mining rights, copyrights, patents, etc. will come under other intangible assets. After that, in intangible assets under development, if there are intangible assets which are under development, will be computer software under development. Next, in biological assets other than variable plants, livestock, farmhouse, other biological assets will come under this working note. Then in investment, long-term investment, equity instrument, preference shares, mutual funds will come under the investment which are long-term. Now trade receivable, in trade receivable, bills payable, receivable, sundry debtors, book debts, allowances for bad and doubtful debts, debts due by directors will come under trade receivables. Now loans, security deposit for telephone, loans to related parties, loans to due by directors, long-term loans. In other non-current assets, capital advance, security deposit, underwrite commissions, issue on discount on issue on shares and debentures will come under non-current assets. Then in current investment, investments like mutual funds which are short term will come under non-current investment. So these are the entries which will come under in the current investment. Then in inventories, this is very important. In inventories, if there are any raw material stock which are in work in progress will be noted down here. Then stock of finished good, stock in trade, store, spare part, loose tool, goods in transit will come in the inventories. In trade receivable, which is current, trade payable, receivables, sundry debtors and so on. In cash and cash equivalents, cash in hand, cash at bank, margin money, petty cash, check, draft on hands will come under cash and cash equivalents. Then in short-term loans and advances, the loans related to related party, advance to staff will come under. And then in other current assets, outstanding income, income receivable, accrued interest on investment and in advance will come. So these are the working note heading, and under this heading these all items are going to be recorded, and the total you will do in the working note, and the final amount you are going to write in the balance sheet. Now next we'll see the format of profit and loss account. So format of statement of profit and loss account is as follow. In the statement of profit and loss account, first will be the income, and then next will be the expenditures. So first is revenue from operation, that means income. Then other income, whatever is the revenue from operation and other income, total, see total income of first and second, you will write it here. Then a fourth is expenses. In expenses there are cost of material consumed, purchase of stock in trade, change in inventory of finished goods, work in progress and stock in trade. Next is employee benefit expenses, finance cost, depreciation and amortization expenses, and other expenses. So all the expenses total you are going to write it here. Then from income minus expenses, the total means the profit will be written here. Then if there are any exceptional items, we'll note down here. Then profit before extraordinary items, from 5th to 6th, whatever is the difference will be note down here. Then extraordinary items, then profit before tax, tax expenses, current and deferred tax, then profit for the period for continuous operations. So total profit which is for the current year will be note down here, and the so on. So this is the format of profit and loss account. Now in this heading like revenue from operation, all what are the items will come under the revenue from operation, we will see that. So these are the working note for the profit and loss account. So in the first uh, item, that is heading, that is revenue from operations. So in revenue from operation, the entries will be sales which are based on the cash or credit. Then whatever is the sales of cash and credit, if there are any returns, sale returns will be less. Then sale of production scrap, sale of services, etc. will come under the revenue from operation. So total you will do in the working note, and the final total you will write it in the profit and loss account. Then in other income, the items will be, the entries will be bank rent, bank interest, interest received on fixed deposit. These are the other income which company earns, interest on investment, dividend on shares, then miscellaneous income, commission if it is earned, interest, rent received, profit on sale of assets, share transfer fees or discount received. So these are the entries which will come under the other income. Now these two were the items which comes under the income. Now in expenses, like first is cost of material consumed. In cost of material consumed, first you will write the opening stock of raw material, add the purchase if there is purchase during the year, then add any carriage, freight, cartage, then less the closing stock and less the purchase returns, and the total you will write it here and in the profit and loss account. Then next is purchase of stock in trade. Purchase of stock in trade less any purchase returns. Next, change in inventories of finished good, work in progress and stock in trade. So opening stock of inventories less closing stock. Then in employee benefit expenses, the entries are as follows: wages, salaries, staff welfare expenses, recorrection room expenses, bonus, employee shares based payment, contribution to the provident fund, allowances, commissions to traveling salesmen, manufacturing productive, unproductive wages will come under employee benefit expenses. Next is finance cost. In finance cost, the entries will be interest on debentures, dividend on preference shares, interest, long-term borrowings, other borrowing cost, loan process charges, cost of finance, contribution to pension fund, charges on loan. So these entries will come under the finance cost. Then next, depreciation and amortization expenses. So whatever is the depreciation on the fixed assets, the second effect will come here. Then amortization on the patent and trademark, loose tool written off will come under depreciation and amortization expenses. Then last is other expenses. In other expenses, all these entries will come under the other expenses like rent, stationery, electricity bill, postage and telegram, legal charges, and so on. So all these entries I have noted down in the other expenses, and the total you will write in the profit and loss account. In the here, okay, so total you will write in front of the each particulars, and you will give the working note numbers also. So this is the format of profit and loss account as well as balance sheet. Okay, so I hope you have understood that under headings what are the entries will come in that heading, and the total amount you have to write in the main balance sheet. Okay, so this is the format of balance sheet of the company and format of profit and loss account. In this way you have to prepare the statement of profit and loss account and balance sheet. Remember one thing, the sequence will be same. You cannot change the sequence. If revenue from operation is at first point, so you have to write revenue from operation at first. Second is other income, you will write it in the second column only. You cannot change the sequence. Same way for the equity and liabilities as well as for the assets also. You cannot change the sequence. For example, you under non-current asset, first is property, plant and equipment. So first will be property, plant and equipment only. You cannot write goodwill as first, and in place of goodwill you cannot write property, plant and equipment. So sequence will be as it is, which is given in the format. Okay, so I hope you have understood today's session. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.